Yeah, guys, welcome all to ALD9. I think last time also we started with the similar slide where we told we are identifying so many stocks, but we are missing it. They are running away. And the problem is we are just seeing them actually. And our regret is possibly we could have bought it. But if you believe me, and I have seen over the decades, that you would have sold long back by approaching just by, okay, this name is appearing in ALD, we can buy, we can try it out. Then you can sell it at 10-20% gains only, possibly, or maybe in loss. But the problem is we don't study it or understood it better. Now, once we understand that most of the stocks run away is like 10 to 50x if we get the right stock, then we need to see where it is today in the today's journey, in this whole journey of 10 to 50x, where it is. Is it completed 30x already? Is it completed 20x? Or is it just at 2x? So once we identified that part, right, and we put the decent enough allocation, then you can create enough wealth out of that journey, basically. So try to understand ALD stocks with that perspective of where it is in its journey and can we ride that journey with sufficient allocation. So a few important points before we kick it off is I am a strong believer in the Peter Lynch and as well as Charlie Munger's philosophy. The persons that turns over most stocks wins the game. And another is the investing is where you find a great companies and once you find them, just sit on your ass. So that's how the two great investors have been my North Pole, basically, North Star. So, which kind of rocks to be turned when they are saying turn as many rocks as possible? Which kind of rocks? So there you need to figure out whether it is towards the long-term need, whether it is a evolving landscape or expanding industry, where the scope of opportunity is big, where the promoters are hungry, where the decent fundamental ratios and you have a proxy investing as well. Simple thesis to understand for yourself so that you can track it and take a call later and you understand the risk as well. And overall, if the valuations are good, you will win. And even if the things don't turn out good enough as per your thesis, maybe you will not lose too much out of this. So once you understand this philosophy of which kind of rocks, um, please take a call on this. So our thought process while designing ALD is trying to find those kind of rocks which will catering to this kind of needs basically. So we try to do due diligence on selecting the names. People have been putting their efforts, and most of them satisfying this criteria in one way or another. So we believe in it cannot be a random bet, right? So based on this, just go ahead and take your call once you understand the thesis. And further, remember before we start, everything is a probability. You cannot be a certain person whether this will perform well or not. And if we are talking in a very certain terms, please run away. Then it's not a good way to invest as well. So remember this part. Everything we discuss is a probability in the ALD and not a certainty. Second is don't invest because it's appear here in ALD. You may lose money. Invest if you understand. And after that, once you understood, you need not to ask anybody whether you want to buy more or sell or exit or hold. You need not to ask anybody. You need to ask yourself only what is the right call. Once you understand, then it is good to invest in those kind of stocks. So with that, I give the opening to Saurabh, and he will take us through first of the stocks which he figured out could fit one of those criterias. So all over to Saurabh for your presentation. And best of luck to all the participants and best of luck to all the audiences for finding something which can create wealth for you.
Thank you, Sunil. Good morning, everyone.
Good morning, Saurabh. Your voice is still muffled.
Is it better now?
A little better. Try once again.
Uh, can you hear me? Is it better? I will hold the mic with me.
No, I think it's crumbling in between. You go without mic. I think that would be better.
But it will be more effectively. Um, can we get audio from my other system?
No, we are not able to hear you properly.
Hello.
Yeah, perfect. Perfect
Okay.
voice.
Great. So, my screen is visible to everyone?
Yes, and voice is also clear. You
Okay,
can.
great. Sorry, 1 minute. Uh, okay, good morning, everyone. Sorry for this. The current system I'm using is not able to download due to some virus issue. So I had to use the other system, but mic is not working. So I'll start again. Uh, so the company, my name is Saurabh. I am based in Bombay, and I am a full-time investor and trader. Um, the company that I'm going to talk about today is Carborundam Universal. It's a 18,000 crore market cap company, so a lot of you might be aware of this company. Before we begin, this is the disclosure. I have a position in the stock. So, Carborundam Universal, in short, also known as QME, it's a Indian MNC with manufacturing operations across multiple countries, including India, USA, Russia, Europe, South Africa, and others. It is part of Murugappa Group and operational since last 7 decades. So very rich history, has seen ups and downs in the business, and continued to grow. It is now the world's second largest SiC producer, which is silicon carbide, and third largest zirconium producer. These two materials, along with some others, are very hard substance and are used for grinding, cutting, and polishing across several industries. So, for example, auto parts, you have to cut them in a certain shape, polish them, grind them. Engineering industries, making machines, and so on and so forth. So it goes into almost every industry. These materials can also withstand very high temperatures, and so are also used to make refractory materials. So in cement, iron, and steel, where the temperatures are very high, the refractory lining can be made of these materials because they are hard and they can withstand very high temperatures. Also, they are corrosion resistant. So again, in chemical industries where there is a possibility of corrosion, these materials are used as refractory materials. So the one point that I'm trying to make is it is a widely used and a very important material. So this company is generally known as an abrasive company, Carborundum Universal. But my thesis today is that it is not just an abrasive company. It is more of a material sciences company with a very strong R&D focus, and it has 100 patents to its name. Uh, let us delve deeper to understand this. So the business is categorized in three main divisions: abrasives, electrominerals, and ceramics. Abrasive part, whatever I talked about earlier, the hard material that goes into grinding polishing. This is the oldest and the largest part of business with around 2,200 crores of revenues. Second part of the business is electrominerals. So these are basically chemicals or minerals which have some electrical and magnetic properties. So this division also acts as a supplier of raw material to the abrasive division. This is the second highest revenue generator for the company. And the third business is the ceramics business, which is the smallest business, and it is one of the new businesses. New in the sense it's been there for a few years, but not as old as like abrasives. Now, to to understand these three businesses better, look at the profit before tax and interest for abrasives. Though this is the largest business, but it is also the business with lowest margins. Ceramics is the smallest business, but with very good profit margins. Abrasive business with low profit margins also happens to be the one with lowest ROCE. Ceramics business has excellent ROCE in 40%. But what is happening is uh, from last 2 years, if you look at this growth percentage, the annual growth across the businesses has dropped sharply. The company was growing very well in prior to 3 years, and then the business growth dropped very sharply. And this has resulted, this is the stock price chart for QME for last 5 years. And this drop in business has also resulted in severe drop of stock price. So from this point to this point, in 4 years, point to point, there has been virtually no return. Uh, 2 years before, 2 years back, before the when the business was growing, stock gave a fantastic run up. But from this high, it has crashed significantly because of issues in the business. So there are 2 points that I want to make here. First point is this: the company has been struggling with growth from last 2 years, and as an investor, before taking a call to invest, we need to figure out if this is a temporary phase or a permanent phase. Is the business damaged for good, or there are some issues which can be solved and the business can grow? And the second point is, in investing, it is said that good prices and good news don't come at same time. So today we don't. The price is good, but the news is not good. The business has not been growing, but the stock is available at a cheaper price. So few pointers on this. We will discuss more, but the first is these other two charts are also of companies which are into grinding medium and abrasives. Grindwell Norton and when did WENTT, I don't know how to pronounce this, but similar behavior has been demonstrated. So it's not a company problem. It is a company problem to some extent, but there's also an industry problem. So which makes us to believe that uh, it is worth looking into the company in greater detail. So what happened? Why is the business not doing well from last few years? So one is it acquired a manufacturing plant in Russia, and it's a fairly large capacity plant. And because of the war between Russia and Ukraine, US placed some kind of sanctions, and this company happened to be in that sanction list, and it has severely impacted its business. So what I'm trying to do is list down all the points why the business has not done well in recent past, and whether these issues are solvable or not, or whether these are controllable by management or not. So this issue is clearly uncontrollable. But we have seen that Trump is not as adverse to Russia as Biden was, who had in the first place put in these sanctions. So though it is not controllable by management, but there might be favorable, uh, you know, uh, situation going forward because Trump is not as anti-Russia. They have a South Africa plant. There were a lot of power and labor issues. So management has relocated part of manufacturing to India. thereby improving this situation, this problem. There were plants in France and Germany. There was uh, there was weak European demand, and there were integration costs when they acquired these companies. So, and then there were geopolitical issues. All three led to a drop in business for these plants. But management is working on it, and my view is, in addition to that, Europe is again going to focus on defense manufacturing going forward. They are working on allocating 5% of GDP to defense, and this will need a lot of these the products from the company. So there is a potential for a recovery in this business. And then they have low value, high volume products where they are facing a lot of pricing competition from China. So the company has decided to move from low value, high volume products to high value products. And this is in company's control, and we are already seeing some progress there. Are you all with me? Sorry, I just wanted to understand if people can hear me and watch this.
Yes. Go ahead.
Okay. So, in, I so can people tell me what do they see here? Anyone can speak? Okay, I am not sure if people know this. Even I didn't know about this few days back. This is the energy farm or a power plant of Bloom Energy. So Bloom Energy manufactures uh, solid oxide fuel cells SOFC based power generating unit, and so this is one server, one hot box, and they installed multiple of these to 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 make a power plant that can be installed very quickly in few weeks or months to power large organizations like factories or data centers or commercial offices. So currently there is a data center and AI led boom that is going on in America, and so there's a massive and unprecedented investment in data centers that is happening in America, and all all large players like Google, Microsoft, Meta, everyone is putting in huge amount of money because this is a race, and early entry and control is very, very crucial to them. So they are investing a huge amount in data centers. But the problem with data centers is they are power guzzlers. They need huge amount of energy. The larger ones need energies which is required by more, few cities. Even a single data center will consume power that is needed by few cities in America. But the problem is they're investing the money. They want to set up these DCs as quickly as possible, but taking a electricity supply from grid, it takes it will take them 2 years. There's no capacity in US. So there's a transmission infrastructure problem in US. So new connections take more than 2 years. But obviously, data centers cannot sit. The investors cannot sit for 2 years waiting for power to come in. So solid oxide fuel cells (SOFC) has emerged as an alternative to fast and reliable power. They are very, very reliable sources of power, and then they can be set up in few weeks to months. And in SOFCs, Bloom Energy has emerged as a very reliable and the market leader to supply these SOFC based power plants. Now, what this has resulted in? This has resulted in the share of Bloom Energy to boom. So 870% returns in less than 1 year. So why am I sharing this? Because obviously there is a linkage between uh, SOFC and what Carborundam is trying to do or is already doing. So this is how the SOFC works. You have fuel cells of small wattage. Each fuel cell will generate some power. You stack a lot of these fuel cells on top of each other, and you put a lot of these stacks in a module, server module. So, for example, this will give say 5 kilowatt power, and then you put a lot of these as a server. 250. So each server will give 250 to 300 kilowatt, and then you put a lot of these together to give power to say a data center, and you can supply even few hundred megawatts of power through this. So this is the fuel cell. This is the heart of SOFC. So the fuel cell comprises of one anode, one cathode, and there's an electrolyte in between. Okay. So CUMI, or Carborundum Universal, supplies this electrolyte. This is made of ceramic to Bloom Energy. And they also supply thermal spray paints, which are sprayed on these anodes and cathodes to improve their heat uh, resistance or capacity to bear heat. And so this is how a hot box looks like. So these are various cells and they are stacked. This is not an exact diagram. I tried to make it using an LLM, but a lot of these cells are stacked on each other. So electrolyte, the thermal spray powder, the ceramic material that is used to stack all of these on top of one another. All these things are also supplied by CUMI. So you can see all these blue things, blue text, the part of it is supplied by CUMI. And this outer box, this metal box, this box is supplied by a company called MTAR Technologies in India. Now, MTAR Technology supplies around 60% of Bloom Energy's requirement. And CUMI supplies, and CUMI has not disclosed how much it supplies. But it is one of the important vendors to Bloom Energy because the way this works is not a supply of a material off the shelf. The Bloom Energy, their engineers, their scientists work with scientists and engineers of MTAR, then Bloom Energy, and CUMI to co-design products, co-develop products. So these are very, very niche, specialized products. So what is happening is this is another schematic of a fuel cell. You have membrane, electrolyte, ceramic, anodes, cathodes, spray paint, thermal, what you call high performance thermal spray powders. These are applied to anode and cathode. This is again another schematic which talks about which parts are supplied by which company. So what has happened is in last few months, not even one full year, Bloom Energy stock is up 870%. Entire stock is up 350% within last 1 year. But look at CUMI, chart of CUMI. It has gone nowhere. So, so all data center stocks are running like crazy both in US and in India. So you talk about Sterlite Technologies, HFCL, lot of these, MTAR, everyone is doing an absolute performance on the stock. But CUMI is not doing it. Why CUMI is not doing it? We don't know. My guess is few factors. One is CUMI has multiple businesses, and unless SOFC alone grows so fast that it is able to take all of the three divisions up together, the cumulative consolidated performance of the business up together, it may or may not lead to fast growth. Two, if other businesses continue, start declining or face even bigger headwinds, then it may not. Then even SOFC performance may not be able to take all the company consolidated performance up. But given the management commentary, the other businesses are improving, and we see what is happening to Bloom and MTAR and to SOFC. So that is one of the reasons, not the only reason, one of the reasons why I believe that there's a huge opportunity for QME. So since management does not give all the details, uh, they they are kind of secretive on what is the opportunity or what is the supply business opportunity that we are talking about. I am trying to share some commentary or some estimate, some pointer. So MTAR is expanding capacity from 8,000 hot boxes to 30,000 hot boxes by 2028, 2 years, which will make the capacity 4x. So I'm assuming if, because MTAR is not the only supplier, QME is not the only supplier, there might be 2 or 3 other vendors. So if the market share in Bloom's supply remains constant and MTAR is expanding 4x, and and there's a kind of a direct correlation because each hot box will have certain number of cells which QME supplies. So one possibility is that we can also see a capacity expansion in SOFC business for QME by 4x over next 2 years. Then there are few comments from management. We do not share an individual component-wise details as far as the industrial ceramic piece is concerned, but it is a very sizable portion of our business and we are progressing well there. Very positive commentary from management. Point number 3, as again this is a commentary. As far as SOFC is concerned, I think the progress is quite decent. We have been fully utilizing our capacity. So if they have to grow, they need to expand their capacity. One of our major customers is doing well, and that progress is really well as far as QME is concerned, and the progress in terms of further parts that we can supply in the SOFC field is also very much in line with the time scale that we are working with the customers. So what they are saying, indicating we are supplying electrolyte already, we are supplying thermal spray powders, we are supplying ceramic elements to stack and hold the cells together, but we are also looking at what we can supply more, that we can supply. This we don't know what is it, but my estimate or guess is the assumption is they are looking at supplying more components. Again, this is from Concalls. So high-end new age applications are robust. Explicitly, they are talking about SOFC. Businesses that we are serving to SOFC and some of the high-end ones, they are growing pretty high, north of 20%. And this is important. We bagged the highest ever order in the last quarter from them. So the commentary is very, very bullish. The industry is very, very hot. We have seen another player, MTAR, doing very well. The stock price doing very well. So we need to, study this company in greater detail to figure out if this company can give equally good returns. So I said SOFC is not the only trigger that I'm looking at. The second trigger is semiconductors. So in silicon industry, you have chips made from silicon. So now silicon carbide is also gaining ground now. So today silicon carbide chips are already used to make semiconductors. It is not futuristic thing, they are already being used because silicon carbide is better suited to operate in high voltage and high temperature conditions. So they don't break down in very, very high temperatures. So the reason SOFC box is called hot box is because it operates at a condition of 800 degrees centigrade. So SiC today is used to make power cell semiconductors, diodes, transistors, etc. NVIDIA has come out recently with, so this I need to explore more. This I have a very basic understanding, but the point that my thought process is NVIDIA has come out with a high voltage 800-volt architecture for future chips, and this will need components that can operate at high voltage and high temperature, And since silicon carbide is more suited for this, there's another application. Silicon carbide, which has a very basic use as an abrasive, is also a semiconductor material. And this company has multiple decades of experience and patents and R&D in the understanding of making of this and using this product SiC. So the abrasive is a low purity SiC, but QMI has developed a very high purity SiC that can be used for growing wafers and ingots. So as we all know that semiconductor chips that we talk about, they are made from wafers and ingots of silicon. So now SiC will be used. Anyway, sorry, SiC is currently also being used for making wafers and ingots, and therefore semiconductors for power electronics. So QMI didn't have this very high purity SiC earlier, which can be used for growing wafers and ingots. Now they have developed it. Trial production has also started with some semiconductor companies. It is not that they are conducting trial in-house without any, on their own, assuming that it will work. They are working with semiconductor companies, and in collaboration with them, they have started these trials. So another thesis that I'm working on is that if this works out, it can be a game changer. If this can be commercialized, this can become a 0 to 1 bet for the company. Now, the real margins are in growing wafers and ingots. So they will be supplying the grains for that, and it will not have that kind of a margin that it will become, a wafer company of $1 billion, multiple $1 billion. But still, they will have there are very few select companies that will have that kind of competence. The third trigger for success. So the first was SOFC, second was semiconductor. Here we are talking about it's not clearly visible. We are talking about semiconductor equipment. So the companies that make equipments for semiconductors, making semiconductors, QMI is also looking to get into that space. So this is a very interesting tweet that I came across. There's a company in Japan which is into ceramic toilet making. It is up 60% in 3 months. I think it is up even more now because they had the ceramic expertise and they were already making these electrostatic chucks, which are like ceramic elements that hold silicon wafers when you are making the memory chips, because those operate at the chip making process operates at a very high temperature, and ceramics can hold that high temperature, can withstand that high temperature. This company Toto was already making those electrostatic chucks. So what QMI is doing, QMI also has expertise in ceramics. It has expertise in material science. It is already supplying elements to hold the fuel cells used in SOFC. So that expertise can be leveraged to supply to semiconductor equipment manufacturers, and QMI is already talking about it. It is developing products to supply to these, and they are already in discussion with semiconductor companies. So this is from their annual report. The ceramics business will scale high margin advanced ceramics with new age applications such as energy storage, SOFC, and semiconductors, while strengthening core segments such as metallic cylinders and refractories. So new advanced usages which are high margin in a fast growing industry of semiconductors is again something that QMI is working on. So these are additional triggers. So we talked about SOFC, semiconductor chips, not chips, but grains for semiconductor chips, and then semiconductor equipment. And then there are a lot of other high tech things that they're working on. So, for example, uh, their ceramics and high performance materials are already used in cutting edge applications for various sectors, including power and energy. Again, power and energy, we know there's a phenomenal demand in both US and India, uh, and there's a shortage of transformers, and HVDC stocks like Quality Power, ABB, and all have done phenomenally well. And Qumi counts all these companies, ABB, Schneider, as their customers for their power and energy system supplies. Qumi is also working in defense, so because they have high performance materials. So, for example, when missiles enter from space to Earth's atmosphere, they work at the temperature is very high because of the friction. So they because ceramics can uh, withhold those high temperatures, uh, those kind of usages are also being explored. Then, because their high performance materials are very robust, because we talked about abrasives, they're working on developing products for armored vehicles. There can be coating of these materials on the armored vehicles uh, for making bulletproof and robust impenetrable vehicles. Then they make something like metallized ceramic cylinders. They are used in something called vacuum interrupters, which go in all these power projects. And then they work on graphene already, and then graphene can be used. It's a very strong material and it is very light in weight, so it can be used for making components of drones. And again, we know that drone is, after all these geopolitical wars, drone has become one of the most important ammunitions, or whatever you call it, for defense. So the defense budgets are moving towards drones. And then they work on phase changing materials where, for example, they're working with life science companies or pharmaceutical companies when, without cold chains, logistics, or storage, the temperature can be controlled for food and pharmaceutical materials, because the material, when absorbing the heat, uh, ambient heat from storing these products, will change their phase, so solid will become liquid, and uh, you know the temperature can still be maintained, and stuff can be, medicines and vaccines can be transported even if the cold chain breaks down. So again, coming back to my thesis, Yumi is not just an abrasive company. Everyone says it's an abrasive company. I believe it is an emerging material sciences leader. It is working on resolving all the past issues very actively. Uh, so anyone can say they are working on resolving the issues, but my point is this is a 70-year-old company that has seen all these ups and downs, and they have successfully resolved all these in past. So there's no reason to believe they won't be able to resolve these issues. They have they have a proven track record of generating wealth for retail shareholders over long term, and and there's a reasonable probability of that continuing in future as well. It's a debt-free company and with excellent corporate governance as part of Murugappa Group. So, they are known for good corporate governance. There are several triggers from new age high growth sectors, and I think this can make it a 0 to 1 bet, this company as such. And the valuations, they're not, it depends on how you value the company, but from any metric, they're not too expensive. For a company working on such new age stuff with proven technology for new age stuff, they are already supplying to SOFC and Bloom. It's not just exploring. Valuations are around long term median averages because the sales and profits have been down due to various issues for last 2 years, and EPS or EV/EBITDA is not a right metric because both those are being affected seriously, or even market to sales, price to sales is not a right ratio because everything is down. But the assets they have built, the capabilities that have built, so I think the right valuation metrics for this kind of business is price to book. This kind of business, when it is down, is price to book. And on both 10-year charts as well as 5-year charts on price to book basis, the company is on 5-year price to chart, the median value of price to book the company has stated is a 7. The company is currently traded around 5. Uh, on a 10-year basis, the median value on price to book chart is 5, and the company is available at similar valuation. So I think there's a low upside and a low downside and a high upside. And even in case of downside, if the stock price closes on a weekly basis below the recent close that have been made, someone can reduce their losses, exit part position or full position. But I think the risk reward is reasonably good at this point in time. Yeah, thank you. That's all from my side. I'll be happy to answer any question.
Thank you, Saurabh. Great presentation. So I have one or two questions. One is how much revenue from the other two verticals which you're talking, semiconductors and this other new age things, right?
So very
Not,
difficult to predict because company does not give. So company has a long-term target. 2030, they plan to double the revenue overall.
yeah. Mhm.
But 1 year, 2 year down the line, it is very difficult. 1 year guidance is very conservative. Part of Murugappa Group, very conservative guidance of 5 to 10%.
Correct. So I
Uh,
think that could be the reason where it is not getting the traction in this when MTAR and Bloom are blooming. Possibly this triggers a little bit far away, but I think the right time to study them as well as you highlighted.
yeah, and uh, plus you never know because there have been very bullish commentary from them on SOFC, and we know commentary from Bloom and MTAR is also very bullish.
Hmm.
So maybe the stock price will run up. We don't know. We cannot time it. So as you said, right time to study, build conviction, and then start nibbling.
Yeah. So a few questions from participants in the chat. I'm just reading it out to converse them properly. One of them is R&D expenditure is 1% roughly for this company. So how this such a small R&D percentage can ramp up on the new age technologies like semiconductor equipments and other things? That is one part of question. Second is high alumina cost. So any hedging done for this year from this company or any that process which company does? If
So
you have.
I was also surprised to see, the R&D expense was less. But we need to look at past balance sheets to understand, what has been the R&D on an average in the past.
Mhm.
Because we cannot, because the capabilities are there, they are proven, they are already supplying to Bloom. So we need to delve deeper into, how at this low R&D they have 100 patents and 62 scientists, and you know that needs to be understood.
Yeah. Yeah, fine. I think more or less these are the questions. And just have a look at the chat in case you find something more to answer from that.
And aluminum price, I honestly didn't look into all that because that is not my style of investing. I am a growth investor. I'm looking at, which are the growing businesses in the company and what they can achieve rather than what the small, slow growing industries are doing
Yeah.
within the business. I let all these smaller issues to be handled by management. I trust that Morugappa Group has done this for
Mhm.
70 years. They know how to, manage these businesses. So I don't really get into uh, hedging of.
Yeah, I align with you on this thought because even if they go wrong, they know how to come back by doing such things in the past. So possibly we have to look this company little in a longer term, not in a hedging way of okay, few months here and there.
We are not looking at a company that will grow 5-10% every year.
Correct.
I am only interested this can be a 0 to 1 bet.
Yep. Great. Any other questions, guys? Otherwise, you can move to the next presentation. Thank you, Saurabh, once again.
Thanks, Puneet, for the opportunity.
Yeah. Just have a look at the chat in case you find something more to answer
Yeah.
before dropping off. Yeah. Okay, so let's move to our next presentation, which is done by me. I hope you are able to see the screen, guys. Just confirm me once. Okay. So yeah, second company of today's ALD session is on the aviation part. So I'm talking about a company which is into aviation safety solutions, plus some other things that we'll talk about as we go forward. As usual, this presentation is not a buy, sell, hold recommendation. It's just for educational purpose to understand the company and how to analyze companies a little bit better. Information, I tried to be accurate, but forgive me if there is something which is not up to date. And I'm not responsible for any financial gains or losses coming out of this. Build your own conviction out of this. I am holding a position in this company a little bit from little lower levels. It has tried to run away in the last few days before we started discussing ALD. So the company is into airport infra, firefighting, and Make in India concept and launch technology solutions. Market cap is just 300 crores. I am a micro cap investor mostly, so I'm looking at companies at a very, very small market caps. Currently, CMP is 539. As you see a small chart, it is trying to break out here itself. And if you see the truck, that is what it is all about, this company at this point of time. But this is not the only thing which this company is doing. So let's try to understand a little bit more better about this company. So Anlon Technology Solutions is a decade-old company. That is one of the things which I do in the micro caps. They should have some history. And this provides engineering services, training, consultancy, advisory, and R&D services for the engineering systems, automotive equipment, and other related areas. Now, what are those kind of equipment? So first, this company is into the areas of mobile firefighting and rescue equipment. Mobile means it can reach anywhere to firefight. That's how it is called as mobile firefighting. A runway rubber removal machine. So runway, airport runway, just visualize. Planes are landing one by one, one after another. Every plane landing deposits a layer of rubber on the tarmac. Every landing, every tire. If this accumulates over a period of time, this tarmac will become slippery and the plane landing can go wrong. That's how I think the importance of this runway rubber removal machine. So you have to scratch that rubber and remove it from that tarmac. Then on the airport baggage and cargo handling, road cleaning equipment, that is kind of municipal thing, power transmission systems, friction testing machines, climate control systems. A small part of revenue is coming out of all this, but they are jumping into that. And then construction and mining equipment as well. They are trying to jump with this, whatever skills or capabilities they have developed in the past few years. Company is looking after the spare parts distribution as well after, and once the sales is done, after sales service for the equipment supplied. So they work with all the major airports, Delhi, Mumbai, Hyderabad, Bangalore, Chennai, refineries, municipal corporations, and with whom they have AMC contracts as well. So airports is driving 80% of the revenue. Other part, whatever we discussed apart from airport, is 20% of the revenues at this point of time. Business model. So they started this company with the concept of they're talking to the big companies outside India, and they're talking to the airports inside India. They are acting as a commission agent in between. That's how they started in a very simple layman language. And after some time, they are trying to make in India those products which they are supplying from this OEM equipment suppliers. So they started making India for the same products. Instead of a commission agent, they are becoming more like a product company out of those equipments. So they have agreements with these OEM suppliers, get the technology here, build some parts, and started supplying them. That way they are reducing the cost of those equipments or the cost of those trucks, cost of those firefighting things. That is what getting them into the Make in India indigenization company, which is supplying at a lower cost and getting the contract from the Indian airports as well. Now, what is the entry barrier you can think of, right? Very difficult to get an entry once it is fixed. Once two or three firefighting trucks are available in the airport, how you will get in actually? Until you need a fourth one, or there is a new runway which is coming and you need one more truck or one more firefighting equipment or some more this cargo handling things, you cannot get in easily actually. So once you secure that, you are there, and then after sales services, keep on driving your revenue further. So if you see the management, they are quite experienced. 28 years of experience into industry and mechanical engineering degree. Another person who is chief technology officer, he is 37 years of experience across MNCs and
Right.
expertise in the CNC gear cutting machinery and other things as well. So quite an experienced team they have, although a very small company. I'm just hearing some noise in the background. Let me see if everybody is on mute. Yeah. Okay. So the some of the examples of the truck. Now, this truck is a firefighting truck. It's a refurbished model, which is make in India, largest world's largest truck. Now, what would be the cost of such a truck? You might think it's just a truck, but it is costing roughly 5 to 10 crores, one single truck. That's how the big the volume is for this kind of product is itself in the market. Second is on rapid intervention vehicle, which is this. Third one is in the rubber removal machine that is also made in India. So I think this is one of the only companies which are making those kind of products in India at such a scale. And then we have the paint removal. So when you going on a road, right, there is a paint. The strips are there. So those kind of paints, if you can see on the tarmac, airport tarmac, that was also used by this company to put and remove. I I request everybody to remain on mute. Yeah, so these are the few products that I tried to highlight. Then we have your firefighting equipment with ladders. We have EV cars. So you can see some of the cars are getting fire. So they have a developed a product along with the OEM, which is fire blanket. You can put on the car, it will cover the fire and close it off. Similarly, this can be used for the other fire things as well. Then you have the city cleaning machines as well. And then this is the normal our firefighting truck, which is on the airport. Now, this ladder is important basically. We'll discuss in some time what they're trying to do here. If you see the clients, all the airports, which is run by Adani or some HAL or GMR or what are the airports, whatever we have, you can see most of them are their clients. So basically, they have captured the early bird opportunity basically into most of these airports. Now, coming to OEM partnerships, that is most important here. So they have tied up with multiple OEMs, as you see on the left hand first column. And the first one is Rosenbauer. This is into mobile firefighting vehicles, exclusive for Indian airports. So exclusivity is there. Actually, they will not work with any other vendor to provide their vehicles. And this company is a global leader in mobile firefighting equipment, 11% market share across world, and 90% presence in India. And they have tied up with Anlon only to serve this as an exclusive partner. So that means any equipment which Anlon thinks to make in India, they have an agreement with Rosenbauer, and this is a company which has a well-known name in the airport. So most of the contracts will flow to Anlon for this kind of equipments. Second is Boucher Municipal. This is on the commercial cleaning machines. Again, this is exclusive for Indian aviation sector. It's a Swiss manufacturer. So big companies from the world, they have a tie-up. And even recently, Rosenbauer CEO is visiting India to make sure that Enlon is on the right track and they are increasing the collaboration for further Make in India products onto the company. Then if you see a winter green, there is rubber and paint removal machines. This is again exclusive for India. So most of these tie-ups, if you see, they are exclusive for India for these companies, except the last one. But all of these companies, they will not tie up with any other companies. Now that is also becoming a risk later. Currently, they are exclusive, but in the futures, they might get into more OEM partners. But at least for the some time, they have exclusivity and they have the runway. So and that is on the OEM partnerships. I will consider it as a kind of a moat for some time until it goes away. Now, why I'm interested? Government focus is also on the aviation sector. They are targeting 220 airports by 2035 and expanding the runway safety programs. Now, company is well placed to capture this opportunity. Their local manufacturing and co-development capabilities enhances cost efficiency and speed of delivery. So they are reducing the cost by roughly 30-35%. So 10 crore truck could be available in 7 crore, 5 crore truck will be available in 3.5 crore. So definitely they would have an advantage serving all these things. And then recurring AMC and spare part revenues. Now, one of the antithesis could be government is putting so many airports, but most of these airports are not functional. If you see in the past 5-6 years, and some of them are getting closed as well, but the initial opportunity is there, and I see if we continue for a decade or more, again since the airports are there and possibly with time this will become again functional, at least infrastructure would be there. So they have the first opportunity to grab this, at least service some part of sector in the initial stage. And since they're a very small company, right? We are just talking about a 300 crore market cap company. Even if they acquire or they service some of these airports, 220 may not be the fully, they would be servicing maybe, let's say, half or 25% of it. Still, the total addressable market size is good enough. Then they have diversified business presence. They are trying to little bit diversify into different segments like municipalities and firefighting engines on the normal apartments and other things. Then strong OEM partnerships we just discussed on this part. High entry barriers due to long approvals. Not easy to get approvals easily into the aviation sectors, and the solutions which they are showing, basically the kind of trucks they are showing, they are unique solutions, not easy to develop. So it requires speed. So you cannot just have a truck. You can think of, okay, Tata and Mahindra can also build a truck, but it has to come with so many features, unique solutions, speed and the urgency, right? Once the emergency things is triggered, an airplane is landing or something, when it is taking off, the time to react to reach that place, it's very, very less. So it has to go at a very high speed and to reach that place within like 2 minutes or less than 2 minutes. The stability of the system and the functionality of the system. So that kind of quality, basically, that is not easy to develop. So other part, as we discussed, no space for multiple players into this. Once you capture this, you are in. And then currently they have a strong order book of 115 crores, giving revenue visibility for the medium term as well. Other part is strong leadership in technical team with understanding of the business and experience. After sales support continues drive repeat business. Make in India initiative is increasing, where almost 6,000 crore allocated for safety equipment across states. And because of large infrastructure gap, this company can capture the significant demand out of it. Currently, they are just doing 60, 70, 80 crores of sales. I think the latest business update is around 100 crores of sales throughout the year. So TAM is big basically. So I would say the TAM is roughly 20, 30,000 crores. Even if they capture some part of it, they can grow really well out of this. And with the exclusive things, there is a scope to grow. And then there are new verticals like they are entering VR based and live fire simulator training for preparing the firefighters for high rise rescue scenarios. So if you see a lot of people, the firefighters, they reach the actual place, and even if the recent Indirapuram firefighting case, right? Most of the trucks or the places they are not able to reach. So here, this company is trying to get into a simulation-based environment on how to react into such kind of situations that can also generate a good revenue out of this. And then specialized fire blankets and other things. They are small revenue at this point of time, but eventually that will also keep giving some revenue. Recently, company is announcing the preferential at 398 rupees to prominent investors. And even I told you, Roser Bear CEO has come to India to strengthen ties with Anlon Tech. Now, a company which is just 250 crores or 200 crores few days back, it has just run away by 100 rupees or something in the last 1 or 2 weeks. Interest of mutual funds is really amazing into this kind of companies. Most of the time, they are looking at 5,000 crore companies, market cap wise, or 3,000 crore market cap companies. But at this preferential, at 300 crore market cap, coming off a small cap fund really signifies a good sign. And even if you go down and see some of the micro cap investors like Sandeep Singh and some other persons are jumping into this company as well. So there is this is I think a good sign where a lot of people are interested. They are seeing this company has an opportunity to grow. Whether it will work or not, that is just a matter of future, right? We cannot predict future. But what is the probability of it? All these people think there is a high probability. It is matching with what we also understand actually. Then coming to industry tailwinds, if you see this slide little bit well, India's population is highest. Number of airports for public use is just 149. China is almost double, and USA is 10, not even 10 times, it's almost 30 times. Think of it, what is the scope of number of increasing the airports over a decade or so? So this company needs to be look at little bit longer horizon and the time which it can serve if things really work out well. Expected number of airports, India is at 150, trying to do 220 to 30 airports. Carrier fleet size, number of airplanes. India is at 700 only, roughly 700 to 800. US is at 10 times of it. So basically, if you look at the Indigo or the other players, they have huge order book for getting the planes. That means they are also seeing the visibility of that people will start flying more and more and they need more aeroplanes. Similar to this, you need more airports as well. And which is the company going to benefit? We see that Anlon is one of those companies. Now there is a minimum requirement of the firefighting trucks at airports per runway. So Delhi has like 5 or 10 runways. So each runway would have a minimum requirement. Bangalore was having one runway before. Now another runway has developed in last 2 years. Similarly, Mumbai has been expanding. So with the airport category, if the airport category is one, per runway you need one firefighting vehicle. So if there are two runways, you need two. Three runways, you need three. Terminal 1 to 3, two runways, you need six. So you can think of opportunity like that. And six firefighting vehicles for six runways, roughly 60 crore, which is currently the annual revenue of this company. Similarly, as we grow further, airport category 10, per runway, you need three firefighting vehicles, right? So there are other things as well, but there's one of the major segments which currently they are working upon. So that is the good opportunity size. And this, for example, I've just talked about Indirapuram, Ghaziabad massive fire. One of the things which was in the news is they don't have a ladder to reach to that height. And that is one of the genuine problems which Enlon management is also highlighting from some time, actually. They are trying to, so most of the Indian companies don't have a ladder which can reach out to 30th floor, 20th floor like that. And with the expansion of cities and multi-story apartments, even in Bangalore, when we a decade back or 2 decades back, there are very few apartments with more than 10 or 12 um, 10 floor apartments. Now, most of the apartments which are coming up is like 30 story, 35 story, 50 story apartments. Noida is also has like that. So I know from the top side, you have a such high rise buildings have a kind of a helicopter pad where you can rescue people from the helicopter from the top. But the fire goes up, right, and not easy to escape at that point of time. And if you have multiple options, one of them is the ladders, which can reach out faster to such places. So they are trying to build such ladders actually, and they are the only company which is trying to get the approvals and get this into a place. So this could be a very big TAM because every city where the high-rise buildings are there, and every city would have multiple zones. So you can think of how much big is the opportunity size from that angle. So I feel that is also a good space for them to grow as well. Okay. And recently, company has also highlighted they are the first manufacturer in India to receive the one of the certificates from one of the biggest audit certified companies to suit. And this is again for the turntable ladder with the rescue during lift equipment. This is the same image which I shown in the earlier part of the slides. So this company is getting the certificates as well from the right places as well. So from this, I think the company has a good um, scope. Another highlight from the company in the recent business update is so they are saying, yeah, they are claiming almost 30% cost advantage, improving the competitiveness in the tenders which is floated by the airports. And exclusive partnerships we have discussed, and they are thinking their margin can expand actually in the coming time. So they have done all the kind of capex. They have taken the land in Bangalore. They have been started the local manufacturing as well. And now I think they are entering into a high utilization phase. So if you look at the discussions, the interviews of the management, and the business update continuously, you will feel the kind of a trigger has come for the company to grow better and faster. And management also expects the margin expansion coming out of this. So I believe in this part as well. Coming to fundamentals and technicals, this is just a decade-old company. It has grown like 8x in sales in the last 7 years. Profit has grown by 20x in the last 7 years. Can it grow further like that, 20x in the next 7 to 8 years? I believe maybe not 20x, but 15x is possible. So I am a high believer this growth is repeatable in this kind of a company. So I took the snapshot around when it was 250 crores. Now it is 337 crores. ROC, if you see, 19, ROE 14, pledges 0, debt to equity is almost nil. So very, very good company, I think, in terms of fundamentals as well. Coming to sales growth, if you see from 1 year, 3 year, 5 year, more than 20-25%. Profit growth is more than 45% over multiple number of years. Return on equity is around 15% plus. Promoter and big money, right? Promoter, FIA, DIAs have almost 70% shareholding. So almost 30% is with the people. And recently also now you can see big people are jumping in onto this. Two red flags I found is again cash conversion and working capital cycle. I think for a high growth company, this is okay, but we need to keep a close watch actually how they're performing. I would be keenly watching the coming up results, how they're tackling this part as well. Because again, this might be one of the reasons to get the money from the big people as well. So could be a red flag, but I would be okay to take that risk personally. Similarly, the same situations you can see on trade receivables and loan advances, but not too big numbers. But yes, I'm a little bit concerned on this. Otherwise, if you see the reserves have been increasing, your capital work in progress has been increasing. So things are looking pretty solid from the company's growth point of view. And if you're looking at the chart, it did not even break down the last year's low. Although it was an SME company, it did not fall down like other SMEs companies by 80-90%. So it is almost trying to capture the previous highs after listing. And if you see the shoots of volumes and recent also, I think pretty big people would be interested here. So not too much downside, I feel, the kind of things they're trying to do, but it's better to look at around 450 or 500 would be the right zone. Now, coming to the risk, can they knock off the alpha returns we are thinking of? Yes, heavy reliance on airport contracts and client concentration. We know what happens with the dream folks. They were also having that heavy reliance on the airports and things, but now they are nowhere. So that is the kind of risk we are talking about. Then the delay in the number of airports ramp up, we see that in the past as well with the UDAN schemes. This did not work out well till now, so there could be another delay here. Delay in the ramping of another verticals like city cleaning, fire ladders, EV blanket, those kind of things can also hamper the progress further. Raw material costs like steel and aluminum are increasing, right? So that can hit them in the local manufacturing, and margin expansion can take a hit. Working capital intensive operations, we discussed. We know it's a red flag. And then technological advancement. There could be something another which has come up with a lighter weight and can do the job better. That could be another risk for this kind of company. I believe the real moat could be the airport authority approvals, which another companies cannot do it faster. And the strong technical partnerships with the OEM could be the real moat. So it's a very high entry barriers for the other companies. Order book is pretty strong at this point of time. Deal breaker could be delay in the ramp up of airports or other verticals on expected lines. That could be a deal breaker for me. I may exit with this kind of thing. Yeah, another thing I think people keep on asking, okay, जाने से पहले एक बार बता दो कहाँ तक होल्ड करना है. बता तो दिया, बाई तो सब बोल देंगे, ओके ही बाई दिस बाई दैट, बट एग्जिट नहीं बताते हैं. सो you hold till the business is on track or you run off your patience, but I have some numbers to think upon it. I feel they can grow to 250 crore sales in roughly 4 years from here with annual PAT of 43, 45 crores. And assuming a decent 25 to 45 P ratio for a company growing at 30 to 45% PAT growth, I can expect 3 to 5x gains looks possible by March 30th. And what is the downside? If I reduce the growth, things don't go expected. I still see they can still double from here, but over 4 years. So maybe they will only grow by 15, 17%. I don't see too much downside. There is a possible upside, but there are risks attached to this. So please take care of the risk, study the notes, study the thesis again from your side, listen to the interviews of management, and then maybe take a call. It's better. So yeah, that stops my presentation. End of presentation. Any questions, I would be happy to answer. Okay, one of the questions is how many airport it serves. It's almost serving all the airports. There is no real competitor out of this actually till now. Yeah, any other questions? Please, you can unmute. Okay, what could be the time for airport business? I think the airport TAM business could itself be like 1,000 crore plus, and currently they are only serving like 80 crores, 70 crores. So that business itself they can capture like 4 to 5 times out of that. And the way the government is trying to work on the airport side of it, I think it will work really well. Second question is how many years there is a exclusive to things. So see, the exclusivity is with the OEMs, not with the government, right? OEMs have finalized this is the company which they want to partner for exclusivity for Indian airports. Now governments want to procure something. That's how this company started. Think again. Company has started because airports need this kind of equipment. They become a commission agents in between, and then they realize this opportunity they can manufacture themselves. Now, winning the trust of OEMs, yes, this is the company which can really manufacture in India and not compete with the OEMs and procure all those equipments from OEMs and assemble it here, or maybe add some parts of it here or refurbish them faster, is a real winning deal, right? So that means those people will not come here and compete against this company. Those are the people who are the real competitors actually for this business. And they have exclusive partnerships with this. So it doesn't matter whether government has that or not. Until there is another player in the world stage which government wants to do and get the procurement. Now, what is the government rule here? Any business which is having a less than like 100 crore or something like a kind of a tender, if our SMEs or SMEs companies can match that order with the big players, they would be the first beneficiary out of that order. So I believe this partnership, at least 3 to 4 years away, I don't see any risk out of this because of this part. Okay, what is the risk involved with any SME stock? Of course, liquidity is one part of risk, right? You cannot average, you cannot easily uh, uh, push your allocations to one side of extremes, right? You cannot have like 20%, 25% allocation, and minimum you need 4 to 5% allocation even when you start. So for some of the people as retail investors, they could be really, really get in one or two lots, but eventually they cannot average if the price goes down. They cannot even average when the price goes up. That is the one of the real risk. So, and if something goes wrong, bigger players would have the faster knowledge. They would dump it earlier than us. So by the time you realize the stock might be 50% down already, and then it will be fearful for many of investors like us. Okay, should we sell or not at that point of time? So SME has the big risk attached, definitely. So if you have to jump into SME stocks, please be very, very clear about your thesis on this part. Okay. Any idea why the big players are not jumping? See, it's the TAM basically for them, right? It's like for one runway, you need 3 or 4 trucks. Will Tata or Mahindra will take those kind of things even if they do the quality work? Imagine the kind of businesses they have. For this small company, that could be a big order. But for those bigger players, it could be a small order. That's why they're not jumping in, and this company has the right opportunity. That's what I feel at this point of time. Okay. Another question is from Ram is, are they doing asset leasing or just asset operating? So assets belong to them. They are just taking money every month from the government, basically on some annual contracts like that, and even the spare parts. So everything belongs to them basically as a company. Okay, so I will take the rest of the questions from the chat. If you have more, just let me know in the chat. Thank you all. So we'll move to the next presenter, Yogesh. So we have a new presenter this time, Yogesh Narwani. So Yogesh, you can hear us, or you can try to share your screen.
Hey, hello, Puneet. Yeah, hello, everyone. Yeah, I can hear you.
Yeah, okay. Try to share your screen.
Yeah, 1 minute. Let me know if my screen is visible.
Yes, now it is.
Right. Thank you. So, hello and namaskar to everyone. Before starting on with my idea, I would like to express my sincere gratitude to Puneet ji for building this wonderful community and platform for providing us and platform and providing us with this opportunity. So around how it started around 20th April when there was buzz around ALD9 in our WhatsApp group ALD9, especially the enthusiasm and encouragement for the first timers to come forward and present an idea. I honestly had very little clarity on what to present and how to approach. I looked at my holdings, my watch list, yet uh, uh, get the things to click. And coincidentally, on the same day, a tweet appeared on my X timeline. Are you able to see my screen? Right?
Yes, yes. Go ahead.
Yeah. So I remember, giving a good 1 to 2 3, minute stare to this, tweet. And interestingly, what caught my attention was not the company names or the ideas mentioned in this tweet, but just the two words that stood out: double and execute well. And then again, a question sparked: which listed company promised to double and it did execute well? Words state me, I pause, try to reflect, to recall where I have read this, where I have come across these thoughts before. And as I reflected, soon things started, putting in place. 3 years ago, company MD publicly set an audacious goal to double our performance in 3 years. Timeline 23 to 26, 2x 3Y journey, publicly committed and accountable. So the question here is, did they really execute? And let's, check the scoreboard honestly there. So before, going deeper into the idea itself and I share you the scoreboard, I would like to acknowledge and thank, couple of members of this community and the ALD presenters whose ideas and thought process help me bring structure and clarity to my, own thinking there. First and foremost, of course, Puniji. In one of his informal session, he casually mentioned something that left a lasting, impact. All you need to do is connect the dots, and that single line become a guiding principle to me while writing and working on whole this idea. You have to keep connecting the dots. So here is the scorecard from FY23 to FY26. Promise 2x revenue in 3 years. So revenue promise was 2x, but in actual it was delivered 1.6x. Kind of miss, quantity missed there. EBITDA promise of 2x, but they delivered it 2.4x, exceeded. EPS, 2x, it remained as 2x as we can see. So the shareholder value was kind of delivered, and the cash from operations from 2.x to 2.6x, it was again uh, exceeded there. So the balance sheet seems very pristine at this point of time. So again, without further much putting on the suspense, the company name is the Kirloskar Oil Engines. It's a 130 years legacy company. Current revenue of FY25 stood around 5,000 odd crores, market cap of around 2300 23,000 crores, 23,500, and a standalone consolidated PAT of 432 crores with zero debt company. So yes, the management clearly walks the talk here. They have delivered, and that distinctions matters a lot there. But in investing, past performance alone is never enough. It gives confidence, but not certainty that what it's there in the plate. So which bring us to the most important question: what's next? What does the company need to deliver? Going forward. This is where I started to looking for the another dot, that what will be the company's next. And interestingly, the answer was right there within the ALD itself. ALD, again, a sincere and honest thing, hasn't just helped to surface idea. It has given us two framework to understand what Mr. Market consistently rewards over time. So that took me back to ALD 7, where we discussed key business optionalities, what market values across cycles. Naturally, this is where I must thank Mr. Farshad. So from that discussion emerged four key windows. There will be more, but I will stick to what once relevant over here. First is consistency of the earnings. So market pays a premium for the business that delivers very predictable growing earnings quarter on quarter. Spin-off from the non-core businesses. When a company separates a non-core business subsidiary into independent listed entities, the value surfaces there. Third one, high value, high margin products. Moving up in the value chain from commodity to the complex, customized products, low margin to high margin products, re-rates its revenue quality. So this is our, the third window. And fourth is, the geographical expansion, how company is, moving into the chain there, into the spreading its geographies. So in the next section, we'll explore this company, how it fits into these windows by understanding its business products, and competitive, positioning. And before I go into this, next slide on the company business and portfolios, would pause for a moment and just sit and observe and start connecting the dots as we go through what the company does and how does its products are positioned by linking them to the business optionalities, and what must Mr. Market will going to reward on this. I will deliberately come on to this last deck to see um, how the connected the dots framework, once we examine its competitive positioning, where these connections or lack of them become much clearer there. So business overview, of course, 130 legacy company, Kirloskar Group, Pune based, 4,500 approximate employees. They are have three business segments. One is B2B, B2C, which is now known as the fluid dynamics, and the third one is the Arca FinCap. I will work majorly on this 87% of the revenue stream and see what is happening over there. Yeah, first and foremost, product is engines and the gensets. So uh, imagine every hospital cannot afford power cuts during surgery. Data centers running your banking applications, telecom towers needs constant supply of electricity to run your mobile connectivity. Shopping malls, airports, all run on these backup gensets. So in India, where grid reliability is kind of imperfect, this is the very important item. It is not a luxury product, but a very essential in the infrastructure building there. And second is our industrial engines. So high horsepower engines from 20 HP to 750 HPs are used there. So you can think of some construction excavators digging Mumbai metros in Mumbai metro tunnels, mining dumper over in Rajasthan, marine vessel navigating in rivers. So the whole complete machine may not be from Kirloskar, but the engine inbuilt it will be um, from Kirloskar there. Third is very important, and the cog in this. There's power solutions for large and institutional. So beyond standard gensets, it is customized engineering solutions, and it is provided for large scale clients. This is where Coil is moving up in the value chain, from selling a product off the catalog to the to engineering a complete power solution for sophisticated clients. So by the way, they have won contracts from Navy. They have won around 700 to 800 crores of engine set from NPCL, Nuclear Power Corporation of India. So these are some high value, highest margin products in this. And then it comes distribution and after market sales. Sorry. So in distribution and aftermarket, say for example, if any data center or if any real estate has put up gensets, so the aftermarket spare parts and all AMCs overhauls, it is, I would say, the one of the most underappreciated revenue arm for Kirloskar. Normally, I don't do much of skull butt and there, but while discussing with my cousins who are majorly then into the ice cream manufacturing business, we use lot of refrigerations, we use lot of items around refrigeration parts. They also use Kirloskar engines to produce powers. So I casually asked them, what is how is the performance of this? So he stated, clearly that there is a one company called Denfos, which is clearly the market leader. It is, MNC. But we in our community and all the channel, we use Kirloskar because their after sales service is excellent. And this is why we prefer them. And we don't want any disruption in the services there. It might be a bit of, lower in terms of performance, but it is, the after sales and, distribution is top notch there. Coming to this another part, retail channel, they have, of course, the Kirloskar tractors are there. They, sell it, spare engine oils, batteries. So they have kind of built up, deep trust to the rural network there. So it is, very important to develop a deep trust with this uh, uh, community for this. Now, coming to this B2C, fluid dynamics, which is, 30% of revenue. So there they have, engine based, pumps. So India with, have a base of around, 140 million farm households. So they are still facing some, irregular electricity supply to for their irrigation. So they have to rely on their kerosene or, diesel based engines. So this is where they are also providing them. And then we have, electric pumps, domestic and electric pumps, LGM. So this is again merged now. In fact, this whole segment is merged now, where the submersible pumps, monoblocks, everything are coming under this LGM. So this LGM is basically a La Gajar machineries. It is a Gujarat-based company which Coil has acquired. It was very dominant in Gujarat. So this segment is now coming under La Gajar, and it is a kind of now non-core business, and it is moved into a subsidy from this FY. So these are the very two important verticals for Kirloskar oil engines. And the third pillar, and you might be very surprised, is Arca FinCorp. So earlier this was known as um, Kirloskar Capital. It is one of the financial arms, RBI license, NBFC. So what it does is, its framework is basically like SG FinServ. So they uh, give lending to their customers, to retailers, to their channel distributors to procure their own product, and they charge interest on this. So their wholesale, their AUM is around 7,600 crores, and of course CRISIL rating AA, and they are lending to MSME, SME, real estate lending. So, and here the spin-off is also confirmed by MD Gauri Kirloskar by 2030. So they will, you know, this business will be moved out of Kirloskar, which is currently embedded into this. So connecting thread over here, every product makes a fundamental India infrastructure gap, story there: unreliable power, water scarcity. So this fluid dynamics, probably it might be possible that they have put up as a subsidiary because they want to get into this water management themes of India, Har Ghar Jal missions and all this. But yes, this is nothing has been declared on this water management side, fluid dynamic side. So this is the kind of infrastructure there goes this. So again, it's not up to this wherever the new India goes, maybe data centers, naval vessels. As I said, that Navy has confirmed orders on this: apartments, complex, highways, bridgings. Power is required, so it is supplying on this there. Coil has that product that benefits. Again, a slight thing here. Market opportunity. How much is the market? So I have read tried to read different uh, reads that this varies from point 0.8 to 4.4 billion on India, depending on whether it is diesel engine and all the gensets plus services. But I stick to a conservative market opportunity, and it is expected to grow by 9.2%, which will land up to 2.7%, 2.7 billion, sorry. And the global market genset is around 24 billion right now, and expected to reach by 38 to 39 billion by 2023 there. And Asia Pacific and Middle East, and then we go into the Africa. This is the number one markets for them, this. And as I said, the key demand drivers comes from data centers, infrastructures, defense and nuclear. They have already won the orders there, 798 crore. And agri and rural things, they are already into providing the fluid dynamics business part into this there. So When we discuss in the coil, of course, it comes into my mind that why I am doing, coil. The number one, the business is Cummins in India there, and I totally agree on this. Cummins, if you see the market cap is around 1 lakh 42 crores. PAT is almost kind of 4x there and in this. And the margin we take margin of around 12 to 13%. It is 22%. It is margin we're say working. So why not Cummins there? So again, the Cummins here, it is trading at very premium valuation. So I need to think who is the the second best player, and what are the optionalities that are available for the second best player, including the headroom where it can go or make big into this. Export percentage, of course, it is a 8% and 30%. So Coil has a major gap to close, and they have already started as per their last AR report. They have started looking on, or they have acquired one OEM in somewhere in Africa. They have started investing in Kirloskar Americas there. And of course, the government and defense make one. As per policy, Coil is eligible, and that's why they want order from defense and the nuclear. And Cummins is structurally excluded from this policy, being Cummins coming from a parent company, Cummins US there. So all the designs and should remain with India there. A bit of challenge their volume rank in India. From this segments, I would say engines and genset 2.1 to 12,000 kVA, it was dominant till last Q. But here they have lost to Mahindra Powerol in this segment volume wise. But uh, if I will project the financial picture as well, but their financials are growing as well. I will also try to put up the commentary from the management that what they said on that. So where Coil wins again, as I said, valuation gap. It's a deep rural distribution, make one defense, and of course, they recently have done one ethanol-based genset with isobutylene, where Mr. Nitin Gadkari inaugurated this. So it has a smaller base with higher growth there. And of course, where Cummins is currently winning, HHP market, it is high horsepower market share and a global parent R&D brand premium. But yes, valuations a bit of concern over there, and Kirloskar has already started working on those lines already towards HHP and power gensets there, or power engines there. So now I come again here. What are the four optionalities which are there, which can fit into my window, and try to connect the dots. So Kirloskar is trading at 4x EV to revenue against Cummins, which is 14x, which is a clear valuation gap. Better risk reward I'm finding in there. Of course, these are the numbers, but on a high level, the valuation gap with the Cummins is, as of now, very huge. HHP and defense revenue unlock, which I said, it is starting to unlock. And in last quarter, there was, straight away in the first opening sentences, there were 2-3 questions on HHP. And they said that, and it is the focus of all the analysts there, how the HHP is, performing. So they provided that the year-on-year growth is 235% and YTD is 132%. They haven't clearly provided, the revenue breakup, but they said that it is, the growth over there. Of course, the Nuclear Power Corporation order is 798. So again, it is zero executed. It is recently, and it is a 2-year contract which will be coming up. Navy order all ahead, and there is another entity they have unlocked, Kirloskar Advanced System, unmanned system. So it is for again for they are getting into the railways and the defense, penetrate deeper into the defense with Kirloskar Advanced System. So it's the largest unpriced revenue pipeline over there in this vertical. Third optionality, as I said, that's Cummins is structurally excluded from DAP 2020 by Indian policy makers. So And this makes Coil Navy make one contract a proof of privilege that they have acquired this contract. This is second to Cummins, who backs this order there. And of course, these are some details like how many items are banned from import. They have to procure from India-based company, so on and so forth there. So again, this optionality is also there. And then a very big ARCA demerger optionality is also there. So here MD Gauri Kirloskar confirmed that it will be spin-off by 2030, and the management has shown a clear intent on them. So this particular vertical is currently valued at zero inside this manufacturing company. They are provided loan to their SMEs, earning interest and all this. Of course, there are NPAs and all this, but yes, it is also a value engine. It is also having its own market cap. But and of course, this is the one of the reason where conglomerates are getting discounted. So as I said, Gauri Kirloskar and their management is keen on decouple this. So Coil will re-rate as pure play manufacturer post demerger there. So now coming back again to see how it into fits into this all four windows. Windows one is consistency of earnings. So they have posted highest ever Q3 in their history. Consecutive quarters, 11 and 12 consecutive quarters of 1,000+ crore revenues there. So there is a consistency of earnings over there. Second is spin-off of the non-core business. So as I mentioned that this B2C, they have already transferred to Lagazar Machineries October 2025, and it is already done. And they have started discounting their margins and from their standalone things. Arca FinCap demerger, as we discussed in last slide, it is also in cards there, which is there. And the relative example is Bajaj Auto to Bajaj Finance, and it was value unlocking of 5 lakh crores of there. And these fits today. This again fits, but it is still unpriced. Window three, which is high value, high margin products, and it is a loading. We have got the evidence like 235 percentage growth in high horsepower segments. Their Optipime range are getting orders which are data center ready, and orders from the nuclear power corporations, navy orders, and of course another is Kirloskar advanced systems for defense and railways there. This is loading, and we have also seen it traces for there. Window 4, the geographical expansion there. As in annual revenue AR report, annual report, there is only international revenue is 8%. It's the biggest gap, and if there is a biggest gap, and I understand it could be biggest opportunity there. And there was one question around in Q3 that what is the international and what we are doing. So their CEO stated that we are heavily investing in Kirloskar Americas. They have also started their OEM in Middle East and Africa for this route where their demand is high, and how they are kind of targeting this. So they said we have three C's: coverage, capability, and capacity there. So with this, we will see how we are going to play this through with JV or setting up own OEMs. They kept things very close to their chest. They kept all the cards very close. Haven't disclosed much on this, but they said that this is kind of in play. In annual report, they openly acknowledge that it is less, and we are heavily focusing on this geographical expansions there. So these are my four windows. Of course, this is financial track record, how it has grown from FY21 to FY25, and this I discussed in my first slide there. So I leave it there. So before concluding in the next two slides, one honest assessment on the risk and red flags there. So uh, important high risk is they have lost a bit of share to Mahindra, though their revenues are increasing. The addressable market, they are the volumes in terms of Mahindra Powerol, which is for uh, small shopkeepers or small household, they are losing there in terms of the volume there. So this is where they have little bit lose the share. Tried to check what could be the reason. They in Q3, the gist that was coming up, they were focusing on HHP and the different high value margin products. But we need to keep an eye that how it is Mahindra Powerol is playing out against Coil there in this leadership position for there. Another important is the management opacity, which I personally feel and tried to cross check. They gave out the numbers, they gave out everything into this, but they haven't gave out the breakup of exact how much crores of HHP is there, how much is international revenue is coming up. So many on many parameters they kept all the cards close to their chest. So even HHP was inaugurated or 2 years back, they have not given the absolute numbers on this there. International revenue, again, as we discussed, it's chronically weak if I compare with the Cummins, who is again very good and listed share. So only 8%. All eyes on this annual report and this Q4 con call, that how much internationally they are growing up. Arca, again, a medium-term risk. The GNPA from, quarter on quarter moved from 1.0 to 1.2. I'm okay with this, one quarter until and unless it crosses the benchmark of, 2.5. So if it crosses more than this, then probably it will lose its value. But again, they have ensured that the things are healthy, um, and they will, revert it back to, revert to, 1 point, this NP and a bit of less on this. Again, as I said in my first slide, where the uh, Gauri Kirloskar committed that we will do 2x in FY, means in 3 years, they have launched a new thing that we want to be a $2 billion company, and by 2030. So their ambition is to to be by 2030 there. So here the revenue and everything, the market cap needs to grow 8x. So the management has around 700 crores of capex there. So there is no clarity or math on how they are going to be a $2 billion target company on this. So this maths is bit of unclear. And as I said, the management opacity is bit of something which I'm closely watching. But if I see results on and on from last 11 12 quarters, they are delivering. They have also provided hints that they will do a JV, joint venture, or acquisitions in there. But still the clarity yet to come on this figures there. And a very low from energy transition to long term watch, like we are moving into solar and battery, replacing from small residential gensets, which will be more solar or the battery operated. But again, it's a very very long term there. And Coil, again, on the other side, is also advancing its R&D and making path towards energy efficient engines there. So these are, some red flags or some assessments which I'm, keeping an eye on. Now, what I will be, track from, the previous slide, like, of course, HHP. If management gives the HHP in absolute numbers, nothing like that. I understand it will be still a small base, but I'm expecting some disclosure around this. So bullish when even they disclose it, proactively, what's in there on this. Navy execution, I need to see. Currently, they have won the order, but the execution is zero. It is a 2 year long order. We need to see how the first revenue is expected to come in this FY27. Need to see how it is, working up. Of course, eyes on international revenue percentage, 8%, which is currently. So if we need to achieve a 2 billion target, we have to be, this particular portion currently, considering that we have 24 billion or around 24 billion dollar market, total addressable market. So maximum portion should come from this, international revenue. So we need to see, of course, there is a gap, but there is an opportunity and how they penetrate into this. So what from Kirloskar Americas, what comes from, the Kirloskar Middle East. So need to see if it, breaks the ceiling of, 10% and more, and it will give, bit of confidence that they are on, right track. Again, ARCA trajectory, NNPA discussed how is the NNPA, what is their wholesale and SME lending growth coming in, and more or less the EBITDA margin direction. Currently, it is 12.2 standalone. They have cut off their fluid dynamics section from this. Need to see how now my margin trajectory remains there. So, and of course, the ARCA demerger process till this point, it is confirmed by MD. It will be, on or before, 2:30, and we will watch for, board approval and CLT filing. So, where my thesis breaks, HHP fails, international states, less than 10%, ARCA grows, NNPA grows 2.5%, and EBITDA margin remains flat. I am expecting, since they have removed one non-core fluid dynamics out of their equation, make it a subsidiary, their standalone should now scale up the ladder there. So these are, I am watching on their quarterly watch list, quarterly con calls, which is expected to come somewhere around mid of May. Again, the most important question for you, me, and everyone: is this business relevant for next 10 years? And the honest verdict, considering the the structural theme in India, India's next decade has all coil has already fingerprints around those. Be it infrastructure, be it AI and data center, it will require the gensets, diesels, for powering their machines there. Uh, of course, India's defense decade is there, so we need some. And of course, India water crisis, where their fluid dynamics are working. The aftermarket compounding, which I said, that their retail business and their distribution, aftermarket distribution, which is very underappreciated there. So how it is growth. So if I put up a genset, every 6 months the maintenance, or every year if I need to change the oil, any spare parts, everything. So this is called razor or blade kind of model, where they can kick in there. So from my understanding, and this every theme in India which is upcoming, coil has some fingerprints already on this. We need to see and clearly how they execute it there. And coming to this concluding slide. So coil is a business, of course, I understand, with genuine optionalities that are not yet priced in. ARCA demerger, HHP, uh, uh, um, defense pipelines executions, and Atmanirbhar policy. All the tailwinds are have the, it's structurally is advantageous for this. Management has shown intent in the past. Management is showing intent as uh, currently as well. We need to see execution on its their strategy, where they missed on 2x revenue, but they were 2.4x on EBITDA in next last 3 years, and a clear clean pristine balance sheet. So the quality of growth, I believe it's worth much better than the quantity of growth there. So with that combination, I see visibilities, visible, optionalities, honest risk also as well, acknowledging there, and a bit of valuation gap against, Cummings, makes this, business a worth, watch for in next, 3 to 5 years there, that how it turns out, how it folds. Of course, I am not, expecting dollar to $2 billion market cap. But if they inch it around, and if they work on the optionalities which they have, even when I was reading Motilal Oswal report on this, so they have provided a bracket of 15% CAGR to 18% CAGR, and then 21%. So even they do it 15% CAGR from here, it will be a doubler. But again, it all depends on how they execute this well. So yeah, this was my concluding slide. And again, thank you to all of you for being a very patient and a good audience there. Any queries around this, uh, I will try to answer on this from my limited knowledge, which I have worked on reading and following this company there.
Thank you, Yogesh. It's a very good presentation, actually.
Mhm.
And it really triggered me, actually. I was tracking this company from some time, but could not latch onto it. And now it's very tempting looking at your presentation.
Yeah,
Th-
thank you.
Thanks for this. So one of the questions is, have they won any orders from the data centers till now? Although Amar tried to reply that yes, they have, but do you have any more insights?
See, again, as I said, the current order book, I, try to check their, things. As of see, and I can see their order book is around, 1,098 crores of order books. The 798 crores is coming from, 790 crores is coming from NPCIL, 270 crores is coming from the Navy. Apart from this, they haven't disclosed any the order book. As I said, there is a bit of opacity on the order book and all this. And of course, if Amar has any figures, I would appreciate if he can reflect on this. So but they said they are working on this HHP things and all this. They have given the incremental percentage, but don't disclosed never disclosed the numbers over there on
Another,
data center.
yeah,
Yeah.
another thought from Saurabh is he was speaking to a person from Cummins, and
Hmm.
Cummins thought is no competitor is close to us, basically. So coming to this Kirloskar oil engine, do you think we have a capability lag in this company, or it's like we are catching up to reach that level?
Steve, as I said in this, in this slide, are you able to see, right?
Yes, yes,
So,
yeah.
of course, Cummins is no doubt a leader. It is already a, around 1.5, billion-dollar company, and its exports are, around 30%. We are not even half or even one fourth of their.
Hmm.
Uh, EBITDA margin, of course, they are, 21 point, around 22%, all there. But
Hmm.
what important point is, two, three optionalities which I discussed, they are excluded from, India's structural policy advantages from government, defense, and
Hmm.
anything. And second, the valuation is, it is already priced in for, as I said in this slide, at 50x P market cap. Sorry, this Cummins edge is 63 PE, priced for perfection there. So I won't be able to make much from there uh, in comparison to Cummins. I will make much in Cummins as an investor. So if you recall, a, fair company at wonderful price or wonderful company from fair price. So from this, I see there is a more headroom, more good risk and rewards in coil. And there are some various optionalities like arca demerger, which will definitely come into the play as from the intent of this. And they have moved out of this B2C segment there. So I'm anticipating they will grow. And from my personal experience, I don't do any scuttlebutt. And I had a call with my cousin while preparing on this. So he clearly said that for aftermarket and spare parts, we rely only on Kirloskar. Even this is not for only for me, but all the the traders in the ice cream manufacturing. I we have different components from listed companies like Ice Make. So again, it's the best in class there for again, it is a different a company. I will discuss. We can discuss in any other. But when I discussed on this, how you generate power, how how the gas flows, which engines you use. So they said that Kirloskar and its aftermarket spares and this is the top notch there. So yeah, again, I agree with Saurabh. Cummins is, of course, there. It's there. But now, if I see as an investor where I can, put my money in, so of course the second choice automatically becomes, Kirloskar for me.
Okay.
Yeah.
And one more question is on any percentage we know for Arca's revenue, or no, nothing from that side.
1 minute. I have this side. Um, oh, okay. I will check on this piece how much Arca is contributing. I had high level figures on
Okay.
the Arca AUM, their retail and wholesale lending there. I will give this figures.
Sure, sure.
Yeah.
Okay.
Yeah.
Yeah, just keep it track on the chat if any more questions come or
Yeah.
if you see something to be answered there. Thanks a lot for wonderful
Yeah.
presentation.
Yeah.
Impressive for all of
Thank you.
us.
Thank you. Thank you, Pankaj.
Yeah. So we'll move to the next presentation. Mithun bhai, you are able to hear
Yeah.
us?
Hello, can you hear me?
Yes.
Okay. Give me a moment. Hi. I am. Hi. This is gonna be my almost like eighth presentation in ALD series, and I'm happy to share again a new stocks from as in from ALD point of view. All the presentation so far has been excellent, as in I liked all the presentation, all the stock selections also. I'm not sure whether I'm going to do the justice to the earlier presentators, but I have a simple presentation. Hopefully, you will like it. And let's start. Okay. So, so I wanted to talk about first of all. Okay, let me share my screen. Can you see my screen?
Yeah, visible. You need to open up something. Yeah.
So, so first of all, I wanted to talk about the wires and the cable segment. And in terms of the wires and the cable segment, there are many companies. And if at all we talk about, let's say, the company like Precision Wires, Precision Wires. So the Precision Wires, Ramratna Wires, these are the two famous companies when I talk about the wires company, especially the winding wires segment. So, and the latest one, which is quite famous these days, is the KSH International. So, all the stocks of this particular segment, the winding wire segment, are touching 52 weeks high. That's the first introduction, the segment which I'm going to talk about. And the stock which I'm going to talk about is Shera Energy. It's also a winding wire company, but it's available in SME as compared to all other peer companies like Precision, Vidya Wires, Ramratna Wires, KSH International. So this winding wires are predominantly used in transformers. These are the winding wires. These are nothing but the copper wires which are surrounded by some insulated material, and that helps for the better conductivity. It is available in fans also. The winding wires are available in fans as a part of the coil segment, which helps the conductivity of the electricity. And that's the segment which will grow. So far, my understanding is because there would be more copper requirement, electronic goods requirement, be it EV cars, be it big wind turbines, be it transformers, be it anything else, as in be it like aircon also, or be it generators also, the electrical generators basically. So these wires, as in especially the winding wires, are prerequisite, and most of the companies who are doing they have enormous demand. So there's nothing like that a new company comes in and they don't have demand. So Shera is one of the companies which is into this winding wire segment. And the basic thesis of this, okay, so this is what it is. So currently it is the smallest of all in the winding wire segment. When I talk about smallest, as in I've compared it with KSH, Precision, and Ramratna. There are few other companies also which are smaller than that, but I think Shera is at the inflection point where it will grow it will grow in a very super normal speed. And why it's going to grow and what kind of things which Shera is doing as compared to any other winding companies. So it is available for 354 market cap. The P is 14. The ROC is 17. The book value is 68. This is the basic data of Shera Energy. This is the pattern, the chart of Shera of a daily graph. Here you can see it has been falling down, and here around April or March ending and April beginning, it was making lows, and then it started moving as the whole market has started moving in that way. But here I wanted to make a note that here promoters did bought at the bottom prices around 9,500 rupees. The promoter has bought heavily over here. This is a shareholding pattern. The promoters hold 62 percentage. The DIs hold 0.9 percentage. No specific DI which is mentioned as a beneficiary click. And within that public, you can see Holani Consultants as one of the public shareholder. They have been with Shera since IPO. It's a merchant banker, but even though most of the times the merchant bankers leaves after the IPO, here they have stayed for the last 2 years. And recently, when I talked about promoter buying around 100 rupees, so these are the promoters: Shivani Sheikh, Sahil Sheikh, and Shivani Sheikh. As in, Shivani Sheikh is the mother of Sahil Sheikh, and there's another guy who handles this company. So son, mother, and the father also started buying, but he bought under the warrants basically. So they have issued warrants recently, as on 22nd of April, and you can see Nazim Sheikh bought warrants for 24 lakhs 95,000. So 24 lakhs 95,000 multiplied by 118 would be around 30 CR. 30 CR promoter has bought himself for warrants only from a Nazim Sheikh. And the current market cap is 354. So within 354, they have bought, the promoter has got almost 30 crores of warrants. Here, his wife, Shivani Sheikh, has bought 16 lakhs warrants. And then we have Holani, who has been the merchant banker sitting with them since IPO, has bought 2 lakh shares. And there's another, recently, they have a recent Quantum Growth Partners LLP, 2 lakh shares. I wanted to focus around these parameters. Rest, I will present another slides of presentation to explain what's the business, what they are trying to do. But these are the basic things which I wanted to make uh, show to basically to all of us basically. So here, basically what happened is, so after that, you can see the promoter holding will change drastically from 31 to 35. Shivani Sheikh's holding will change from 4 to 9. Holani's is already existing investor with 2 lakh 20, and they have doubled the position with another 2 lakhs, which comes to 1.45. And Quantum Growth is the newest among the public investors. They have bought 2 lakh shares. This Quantum Growth, when I checked further, I got that within Growth, basically, there is a guy called Neeraj Ghemawat, who has been the director of this company and who is a partner, basically, of TGC Capital Partners, and they predominantly invest in the developed countries, and their portfolio consists of these kind of investments more or less towards AI, EV, logistics, IT. So these kind of businesses. But the chap who belongs to this company, as in most likely it is his company only, is Neeraj Ghemawat. And he did not bought under TGC Capital. He bought under his own another LLP incorporated, and he bought the company under that particular firm. And that's one of the big reason where I can think that here the companies has an inflection point, and the people who are privy to this knowledge will buy this company around these prices. The another reason to buy this company around these prices is the PE multiple of this company is 14, and the rest of the companies are quoting around 38, 40, and KSH around 65. So far, if everything is good, then I will proceed further. Any questions so far over here? No. Okay. So here I present. Sorry. So this is Shera Energy's presentation. Mostly an presentation created by AI as a notebook LLM. So let me know if at all you have any doubts over here. You can stop me any given time. But the understanding is they have been growing fast with the EBITDA growth of 42%, 30%. There's a backward integration as well as the forward integration. I will talk more about the forward and the backward integration. And they're gonna move to NSE main board. They have already applied, but once they get an affirmation, they will be eligible only after completion of certain number of years. I suppose 3 years, and they will be available in main board since Feb 2026. I think that would be the main reason where it will be available to more smaller retail investors, and it can have a similar story like what we have in Krishna Defense, where when it was in SME, it was moving around 700. Once it moved to main board, it moved faster because it was available to the retail investor and they were able to compare with the other peers. But that is one of the trigger points which I can think which will have a good reason. A small spike around Feb March. Sorry, around yeah. So far they haven't got the approval, but they will get the approval and then they will move. I'm sorry, it's shown as Feb 26, but they haven't got the approval. So the another point, the income, EBITDA, net profit, everything has been growing, and the EPS has been growing at the rate of 48%. Their main products are the aluminum products, copper products, and the brass product. Brass products, they're the capacity utilization the highest is 85%. Copper is around 77. These are the this numbers changes every quarter and quarter. They have been increasing their sizes as in their capacity over a period of time. I suppose every 6 months, they have been trying to increase their capacity. So now, what is the strategy which they have followed? So first of all, let me tell you, Shera Energy is a main company, which is a parent company. Then they have subsidiaries. It's not 100% subsidiaries, but there are subsidiaries. There is Shera Metal, there is Shera Zambia, and there is the Rajputana Industries. Rajputana Industries is one of the company which is already listed in SME. Again, so a parent company which is also an SME. They have Rajputana Industries, which is also an SME, is already listed in this segment, and they have 51% shareholding. This basically deals with the recycling of the products, where they get the scrap products, which is mostly copper, aluminum, and they try to recycle it and make it available to Shera Energy or Shera Metals, depending on the requirements. The another thing which they did is they realized that in India, they can't only just recycle. So they need to have sourcing of the raw materials also, direct copper. And that's the reason they went and scout for African continent. And within that, they have figured out Zambia is one of the favorable conditions, favorable country over there, where they can get copper. So they did not started the copper mining over there, but they started a copper refinery over there, where basically the miners of copper get their raw material as copper to Shera and they refine it. And they have the first refusal concept, as in where if at all they refine it, they will be the first to tell if at all we don't want it, then they can sell it to the other party. If at all they want it, they can get it from their actual miners. and that's what they are trying to scale it big. So this happened, the investment happened in last year, and this Q4 was the trial period where they were trying to, sorry, Q3 was the trial period where they made copper cathodes available, and they were able to sell it at a very good prices, around 90, and they're trying to sell it little cheaper than their competitors, but still they are trying to see how the market is, and they realize the market is very big in African region, and they are trying to scale it big over there. Another good thing about Zambia over there, that they don't have to export the products in India. They are able to sell all the products within the African continent. So that's the good part over there. Then they are also getting into EV based wires, basically more purity wires. And I will come over there. And then they are getting into solar cables, which are known as solar ribbons, which are similar to the winding wires, but they are little specialized in terms of the winding wires, and they carry higher margins. So currently the EBITDA margin of Shera Energy is around 5.56. It fluctuates on a quarterly basis, but let's say it is around 6%, and they are trying to increase this EBITDA margin by entering into the segments which carries the higher margin. So currently they have a capacity of 12,000 metric ton. They have invested, and now they are trying to scale it up to 2,400 metric ton, and their target is to get to 5,000 metric ton. They are thinking about the capex of 300 to 500 crores. They have not decided yet that how they're going to fund it completely, but it's going to be a partial of equity debt or foreign debts as per the requirement, basically. But they have been raising capital, like what they did just as a warrants, and just before that they did QIPs also in last year, as in so around 175 rupees. So how they're gonna increase the margin? So first of all, the solar ribbon line, which is specifically for the solar and solar energy renewable sector, that carries a higher margin, and then getting into the advanced appliance and EV wires only. So they are not gonna get into components, but they are getting into super fine wires, which is gonna be required for. And they had tie-up with Hitachi also, but they just had a tie-up. They haven't got any orders. My understanding is they will get the orders very soon. I will let you know why they will get the orders very soon. So here is the subsidiary ecosystem. Rajputana 51% Shera Metal 85%, and Shera Zambia 99%. The remaining shareholding in case of Rajputana is with public. The remaining shareholder in case of Shera Metals and Zambia are with the same sets of promoters. And what each company does as in terms of so that is what it is. So how does it work in the order generation and the order enclosure, basically? So what happens is we asked about the volatility in the copper prices, how they gonna manage this volatility. So they said that as soon as we get an order, they place an order in LME and try to book it so that there is no volatility. Whenever the client contacts them and tells them that we wanted to buy, as soon as they get the amount, they book the whole contract and they get the copper, and then that's how the working the flow of the order goes on. So they don't have any price volatility in their books. This is what the Zambian operations gonna be look like, where they're gonna source the minerals and produce the cathode production and export it to the African infrastructure project, basically. And they recently, because the Zambian one is working so well, they realized that they will create another subsidiary, which is Shera Ethiopia. So they have created the Shera Ethiopia subsidiary also. They haven't started any business over there, but most likely it's gonna be a trading center for the selling of their finished products. This is the Rajputana's industries thesis. Basically, they collect the e-waste and the scrap, use it for they extract the required materials from them, and then use it from a Rajputana point of view. I was talking about the margin. So let's say the margin was around 7.5. last quarter, HY 26. So by backward integration with the Zambian cathode, they are able to get the margin of 15 to 20%, where the results gonna be reflect this year in a very good way because the trial happened and they were able to sell it completely. So I expect the demand is far good and they will able to get higher margins and there's no major cost involved. This is not a mining, this is just a refinery. So they are going to get 15 to 20%. Then what they are trying to do is just creating winding wires does not gives them the higher margin. So they are going to they're going to help to create cables also. And they're going to sell it to their existing business clients that instead of just buying wires, we will give you higher better products like say cables, and that's the way they are getting into forward integration, and there the margins is around 7 to 10%, which is far higher than the existing winding wires margin. All the other companies, the Precisions and Ramratna, they also have the similar margin, 5.5 to 6. In fact, KSH also has 6.5 also. 6.5 as a margin. So they are targeting for this year, FY27, around 10%. But let's say they don't cross 10%, they cross 9% also. So the product margin, which will move from 7% to 9%, there would be an increase in the margin. They are targeting double-digit margins. Okay. And here, now they talk about the how they're going to fund it, the Zambian capex. First, they will use the cash flows. Second is the equity, and then they will go for debt. I don't know how much equity they're gonna raise it and how they're gonna raise it. There are multiple ways to raise equities in case of Shera because they have multiple subsidiaries. So they can what they did in Rajputana, they listed that company. They can do the same thing for Zambia and operations also, where they hold 99%. They can do it that way, or they can do a QIP in Shera Energy only as a parent company and they can use it. I will prefer that if at all they do it from Shera Energy, that's what the initial thought process is. But there are multiple ways for Shera Energy as of now. We will get more insights once they declare the results as on 4th May. And once the conf call is arranged, we can raise this question to them. So Q3, Q4, the Zambian operation starts, the cathode production starts, the solar ribbon starts. I have no idea when but they have already applied for the NSE main board. And from FY27, basically the Ethiopian, they are targeting for 5,000 metric ton, as in 3 times higher than the existing capacity what they have in the Shera Energy. So in coming years, they were targeting about, let's say every year they're targeting 30 to 40% growth rate. In fact, in sometimes 50% also. So they have a range because the commodity prices fluctuates, but they more or less focus on the volume growth. And on a base assumption, I expect 40% as the sales growth rate year on year. And for let's say for next 3-4 years, they are expecting 10x the capacity expansion, which is like gonna be FY29 or FY30 maybe. But I'm expecting very soon a kicker based on the results of Q4. So and movement from SME to main board, I expect at least 50-60% gains in next 6-7 months. Basically, that's the thesis which I have. So far, I've been quick in explaining what is Shera Energy, what is the winding wires does, and what kind of reasons I have that it will move very fast. My usually presentations are very raw, because as in that's how I collect the data and I scrape it and I say this is what I have. I have explained everything in these presentations as in a part of this Word document also. You can go through this. If you have any questions, I will be happy to explain it. Or and then I can talk further about another company as a bonus share, which I already explained to Punit Bhai. So, hello, you can hear me?
Yes, Mithun, we can hear you. Yeah, I think a good unknown bet, right, for a lot of people that way.
Yes.
So let's see how people react to it. I think it's we try to give a good coverage of how the backward integration and other things are placed with this kind of company. So we'll look at some of the questions. I think let me check. So one of the questions is what if the orders are cancelled? How the orders with the LME exchange will be price risk will passed or not, or how they will hedge the risk in such kind of scenarios, or will they pass the raw material price both upside and downside? Those kind of questions, basically, if you can help with the thought process.
So I am not sure about the order getting cancelled, as in most of these companies does business on B2B basis. So usually the order, if at all they get cancelled, they would be definitely retain some of the money because they don't place any order without getting advances. So all the B2B companies normally, if at all, let's say my order size is, let's say, 100 crore, I will place an order with at least like 25 to 30 crores as a advance and then start the business, because every company does the same thing, as in it's not only Shera, all other companies. Everybody is scared about the raw material fluctual volatility, price fluctuations over there. So they will retain that money and maybe give that money, the remaining money, to the company. But so far, this is a very good question. I can ask them in their conf call that how they manage if at all there's an order cancellation. Likely the answer would be the same thing, as in if at all the order gets cancelled, we'll retain some money and uh, give the money back, maybe something like that.
Okay. Okay. So, any other questions, guys? If you have for Mithun, put in the chat. I'll wait for a minute, Mithun, if people have more questions on this. Okay, so people are more interested to know what is the bonus idea you have to talk about.
And but bonus shares normally do not work. That's what I've seen. But this is very promising again. So, but let me share. If at all you have no questions around it, then let's share the bonus shares, which I think it has a very good optionality. But again, it's a risky. As in normally, whenever I present in a ALD series, I try to present all the main board stocks so that people do not stuck their money. But I think this is gonna be main board very soon, and the result is gonna come as on 4th May, and I can see everything, whatever. So it's a trend which it's a pattern which I saw the same thing in Apar Industries, where they were having single digits EBITDA margin, and somehow they were able to crack good products, and they went from single digit to double digit margin. So in the sales increase, the EBITDA margin increase, so automatically it delivered huge as in huge share price returns. As in I suppose Apar was one of the stock which may give me confidence that to bet on these unknown companies. And I played Apar from 800 rupees to 3,000. Then there was jerk. Then I sold. Then I jumped back around same prices around 3,200. And as in, I really enjoyed Apar very much. It was very big position for me. In fact, I remember I talked about Apar with you when we met physically in Andheri, basically. So we had this meetings, right? So I talked about Apar also. This is one of the good stuff which I think, but at that time it was also around the same prices, 2,000, 3,000. But that's the same trend which happened in Apar. I see the same trend happening in Shera. The volume growth, the price growth, and the margin growth. So it's a beautiful multiplier in the stock prices, basically. So let's talk about, if at all nobody has a question, then I will talk about my bonus shares, which I wanted to talk about a company called Swan Defense. It's not a newly listed company. It's an old company which got renovated and redeveloped, basically. But let's talk about why I think it's a very good potential. Let's say it's a at least 3x, 4x potential, which I can see in next 3 years, basically. So first of all, I will talk about this peer companies like Mazgaon. Mazgaon as a company, Mazagaon as a company, doc is basically a ship making company. and they have basically these kind of sales numbers. The sales moved from 3,500 to 13,000. And in terms of fixed assets, you can see the similar trend. The fixed assets are increased. This is their land, this is their plant and machinery. So basically their fixed assets are increasing. Recently they have increased their land bank size. I have not researched further because that was not my main stock thesis. But increasing just land won't increase their capacity. It is mostly the plant and machinery which increases the capacity in terms of having impact in the sales base. That is for the Mazgaon, which I think this is what is happening in last 10 years, which is available in front of us. All the data is from Skinner. Any questions, I will be happy to research, investigate, and analyze together. Then there's a coaching shipyard company. Both of the stocks are multi-bagger. Basically, it has moved from 1,700 to 4,700. Not so big jump in terms of sales, but we can see the reasons also and the justified reasons also that how it will increase further. Their operating profit has moved from, let's say, 417 to 710. It is okay. Coach plant and machinery was as in almost similar 14 to March 2025. They have increased they have been doing the capital work in so many years, and recently the capital work in progress moved to the finished, as in finished capital block, as in asset block. So it has moved from 2000 it has moved 39, and the remaining balance is left out as capital work in progress. Now I can think coaching shipyard will do far better than Mazagaon in coming years. That will okay. Then I will talk about Swan Defense. So Swan Defense, what happened? These two are the PSU companies. Basically, these are owned by government and held by government. Swan Defense, on the other hand, is not a PSU, it's a private company. And it was owned by Reliance at that time. Initially, it was known as a Reliance Naval. Reliance did massive acquisitions, tried very big investments, but somehow it failed. So this is where I can show how it failed basically. So their sales were decreasing drastically. They were not getting any orders. Every orders were moving to, as a move to initial Mazgaon and Cochin shipyard. But as in we recently know, as an Anil Ambani was on no good terms as such with the current political affairs. And then over here, what you can see is the plant and machinery. The plant and machinery over here has been like this much, 5,000, around 5,000. These are, and but the capital work in progress was also increasing. So they had a capital work in progress 3,200, which moved to 4,600. Then as on March 18, let's say the promoter group realized that they can't take it further. What they will do is they will write off the assets because we are not getting the orders as such. And they write off it. So they write off and took the hit of 9,000 crores. 9,000 crores of capital as an assets getting lost as in booked as a losses over here. And that's the reason it showed massive losses in March 2019. So now, after realizing that we can't do it further as a going concern, let's declare bankruptcy. And once the creditors took in and they took it to NCLT, so from as on March 2022, there was there it was under NCLT, and that's when the Swan Corp got in, as in Swan Corp as a parent company took in, and they gave haircut to the existing shareholders. The haircut moved from 738 crores of equity, moved to 3 crores, and the remaining they have infused their own capital. As a result, it is shown 53 crores over here. So almost 95% of the shareholding went to the parent company called Swan, but under via their SPV, which is created was Hazel Infra. So Hazel Infra was the SPV vehicle which was created to take over the Swan Defense as a Reliance Naval as a company. They did a name change it to Reliance Naval to Swan Defense, Reliance Naval to Swan Defense and something like that. So after doing that, they have the shareholding of 95%. So and then it has to give an option to get listed, as in the existing shareholders, which were like 6% or 5 point something, they need to move out, and that's the only way to move out was either they directly buy back those shares or they list it in the exchange, and they listed it. It got listed around 35 rupees, and I remember I did a rough maths under my spreadsheet for when it was getting listed, and the next day I was placing the orders like crazy around that prices. But we were not getting any shares because the supply was screwed up and there was good number of demands. I suppose many big HNIs and big investors would have already got the info that what kind of things they have, and they were placing the orders. The stock did not move any bunch, as in does not give any option up to 2,200 rupees, as in it was going up a circuit from 35, 36. I tried till 100, and then I gave up. I said I won't able to place the order any every day. Let's give up. And I saw that it stopped around 2,200 and then it started falling down. And then I thought to share the thesis with you all, and I did little bit of buying over here also. But over here, what happened in between? I forgot to inform that there are long-term liabilities also, which were long-term and short-term liabilities over here. This were around like these kind of numbers, big numbers. They what they did was they when apart from the equity shareholders, the long-term borrowers, the other creditors, other borrowings, they cut off these numbers also. So the long-term borrowings moved from 15,000 to 2,148, and short-term borrowings, the other borrowings moved from 12,000 to 800. Everything is booked as profit over here, and that's the reason you see a higher number. Basically, just writing off the debts also is a profit, like writing off the assets is also a loss, basically. So this is how these big numbers are reflected. Just in case if at all you see the screener, you should not be surprised by looking into these numbers. So the interesting part over here is now Swan Defense has assets worth 1,180 crores. So this is the main row, as in it is like okay, let me just show it to you how it looks. So this is 1,180. 1,180 as an asset. When you click on the plus sign, you will see the numbers, okay, the underlying numbers. Over here, 1,100 to land, fortunately or unfortunately, there is no depreciation on land, so it stays as it is, okay. The buildings, they have added little bit, okay, there are depreciation impact in buildings, but they have added, I suppose. But in case of plant and machinery, here the plant and machinery, the gross block is same at it is just the accumulated depreciation they are trying to hit it. So if you see the gross block of the assets is 4,934, and here accumulated depreciation is 4,926. So they, as in it indicates that only 10 crores of plant and machinery is here basically, because that is how the numbers will look like 1,180. But that's not the real story. We know that the plant and machinery exists. It is just an accounting way to show that we are making losses, and accounting way to make me up making profits. So recently, why I think this is just a mere number, but the reality is far hidden, because they got big orders recently. So the basic analysis is they got big orders like from the energy one to create 9,500 DWT dry weight ton, basically dual ammonia. This is the first of the kind of order, and they also got the defense order from Sultanate of Oman, basically. So these kind of orders, which were first of kind, which is given to Swan Defense, if at all they don't have the plant and machinery, they won't able to take these kind of orders, or they won't get these kind of orders. Apart from that, there was an fundraising. This is predominantly they have to raise, as in decrease their stake from 94 to 75 anyhow. So they sold their 5% of the stake. The 5% of stake has been bought by Nikhil Kamath under Kamath Brothers brand and Quantum Mutual Fund, basically. And they bought it around for 1905. The floor price was 1905 to 1910, basically. And that's how they sold 5% of the stake. So these guys bought in, they got big orders. Also, they were talking about the orders is worth 500 millions of orders, where the most of the orders gonna be reflected in FY28, as in the most of the sales will be booked in FY28 as per their interviews, which were given in ET now. There are only 2 interviews so far I located by Swan Defense, not by Swan Corp, Swan Defense. And they talked about specifically about what kind of orders they are getting and what kind of revenue potential they have. And if at all we see the numbers, okay, over here. So the numbers which would be like this, it will be around, let's say around next 2-3 years, it would be the minimum are just the orders which they have got. The new orders they will kick in, and the new orders they. Hello, can you hear me?
No, we can hear you. We lost for a few seconds in between.
Okay.
Yeah.
So
Go
okay.
ahead. Go ahead.
Basically, what I talked was about the Kamath brothers getting into QIPs for 5%, because they have to decrease their shareholding from 95 to 75%, and that's the reason they have been selling their shares. The second thing is they got the order uh, for the this dual ammonia bulk carriers. We require ammonia for green hydrogen, basically, and that's the reason I suppose they got the orders. Apart from, they got an order from government of Oman, basically, and they have paid off all their dues as on March 26. So all the creditors have been settled off. Now they are free with all the liabilities, whatever came with Reliance Naval. And this is their basic comparison. So the market cap is 9,600. Here the market cap is 1,10,000. Here the market cap is 45,000. The sales is 51. The sales is 12,840. Here the sales is 4,700. Fixed asset was 2,800. Here the fixed asset is 1,432. Here the fixed assets is 1,180, which along with the question mark, which I think is not the case. Swan Defense at one time was at least 5 times bigger than the Mazgaon and Cochin shipyard, but now it is like 3 times bigger at least, because based on the size. So vessel capacity is around 4 lakh DWT. Here is 2 lakh 35, and here it is 80,000 ton. The only reason Mazgao is able to do higher sales, again, it is because they outsource their smaller ship makings to another company. But they are also trying to expand. That's the reason I suppose they bought land, but they do need to do plant and machinery also. So any which way, so the plant and machinery already exists in Swan Defense, and they got the orders. Now the thesis is that around 4,500 millions of orders they have already got, and they are expecting far bigger orders coming in, because they have the highest capacity as of now. And the assured order, which 500 millions will bring around 2,800 to 3,000 crores of sales in FY28. So once you put in this number of 3,000, the numbers, the PAT margin, the EBITDA, everything will change drastically, because they have now very less debts. They have written off the creditors also in that way. Now they have assets which is not reflected over here. So they're automatically, the return on capital employed, everything would be far superior than the Mazgaon Dock and Coaching Shipyard. And at that time, it will get the valuation maybe superior than the Coaching Shipyard and Mazgaon, basically. And that's what my thesis is, that it would be at least 3x, 4x potential. Unless, I don't know. I think Modi government will favor Swan Defense because of some friendship which they had. But again, it's just a guesswork. My point is, if at all India needs to scale up in shipping industry, they can't leave Swan Defense behind. Swan Defense has to come in and chip in its bigger role, big brother role in coming days. And then we might have in FY30 far bigger number than Mazgaon and Coaching Shipyard, and their sales, their market valuation will also reflect the same. That is what it is, what I can talk about. Please let me know. This is very confusing story, but I tried to make it simple, as simple it could be. But still, if at all you have some questions, please raise it to me. I will be happy to share.
No, thanks for simplifying it. I think a lot of people, it includes me as well. We get confused with, okay, the stock price has just moved from 25 rupees to 2,000. Is it really worth betting at this time? But the way you have simplified it, right? I think there is a big thing further to it. Of course, everybody has to take their own call on that. Okay, how much big it can be, how much time it will take, and will they really turn around or not?
Yes.
But again, as you said, right, they have the capability, and we cannot leave Swan behind if India has to grow in the shipping side of it. So, yeah, good one, bonus idea, I think.
Okay. There's a question from Rajiv Turi. So accounting practices not authentic. The question is, Reliance Naval booked that losses. And whenever a new company comes in, they will try to buy it really cheap. And it was not so. It's like the highest of the lowest, as in the highest amongst the bidder, who would be the lowest among lowest as in numbers and wise, because it's a bankrupt company. So you buy a company worth 1 rupees at 25 cents or 20 cents basically, but it should be higher than the another code, the latest code. So that's what I can tell about the accounting practices. Any comparison with GRSC? So let me tell you, the GRSC's chair CEO, the person who was working with GRSC has left GRSC as a company and joined Swan Defense. So you can think about the capabilities which GRSC had will automatically get added up to Swan Defense. Any other question? Swan Defense at current market price is factoring FY28. The answer is no, FY28. If you see the market cap, Cochin Shipyard is 45,000 crores. Masgaon is 11,000 crores. Sorry, 1 lakh 10,000 crores. Market cap of Swan Defense is 9,681. So the current price is based on the number of equity shares. So the number of equity shares in case of Swan Defense is very less, and that's the reason, the denominator being very less, the price of the numerator is shown very high. But if you see the market cap is apathy 9,681. It should be like at least 4x, 5x of this number, because they are far bigger than the Basga and Coaching Shipyard. Right now also 80,000, 2,35,000 is like 3 lakh 20, 3 lakh 5, 3 lakh 5, which is here it is 4 lakh.
Yeah, I think the opportunity size is there definitely, but how early, I think that's a subjective thing again. 28, yes, looks little bit more things possible. 27, maybe not.
No, 27 is not the play which, but FY28 looks very good, promising. You can play via Swan Corp also, as it's a parent company, but again, as in when you have the subsidiary which is already listed, and this is gonna be their main play. So either or, as in somehow they will have to make money, and Swan Corp they did not make money much. As in their another subsidiary Veritas is also not performing that way. But I think Swan Defense, there's a strong tailwind, as in
Yep.
so, and they have the highest fabrication, so all the wear and tear of the shipbuilding will happen. The most likely it will go to Swan Defense, because they have the highest fabrication facility.
Correct. Okay, so in the interest of time, just have a look at the chat and answer if anything pending there. So we'll move to the next section of quiz and vouchers. Thank you once again, Mithun,
Thank
for
you.
both ideas.
Thank you.
So guys, we have to come towards quiz and the vouchers. Let me share my screen. Let me, yeah. Are you guys able to see my screen? Yes, okay. So this is a quiz. I think a lot of you are familiar with it. It is fastest fingers first. I have just given an example. The question is how many X are written in the question. The option A is 3, option B is 4, option B is correct. So that means you have to type B in the chat box. So whosoever type earliest for 2 consecutive questions, that person would be the winner of it. So I will move to the 2 questions basically. So you don't have to answer now actually, guys. This is just an example. Okay. So question 1 answers I will put in the chat. Now after question will be appearing and then you guys have to be ready. Okay. So here is the first question. What percentage of revenue for Avalon comes from airports? Option 50, 65, 80 and 90. Yeah. Thanks for answering. I think still answers are pouring in. Yeah, we have quite a number of good right answers. The answer is C, 80%. So we can stop answering for this question. I will put a break in between, and then I will ask question number 2. So whosoever has asked C, I think they should look for the next set of questions to answer correctly. Carborundum Universal is the world's which number of the largest silicon carbide producer? First, second, third, or fourth? Yeah, the answer is B. I think a lot of people have answered it correctly. So we'll move to the question number 3. I will put a break line. What is the Kirloskar oil engine's export percentage? You guys are too fast. Even like supercomputer is running in your head. Yes, the answer is correct. It's 8%. Putting a break line now. Other guys can stop answering as of now. So question 4 now. What is the biggest moat for Avalon? Great. So I will have a look at all the answers, and when we reassemble or maybe end of the session today, we'll share the winners in the WhatsApp group for this. Thanks for attempting the question here, and we'll break for some time. We have consecutive 2.5 hours discussed on some good ideas. I think all the ideas are talking about 2026 and beyond. I liked the presentations really well. Some deep analysis as well from Mithun, Yogesh, everybody actually. Different way of presenting through Saurabh. Great. So let's meet, maybe take a 20-minute break. Let's meet back around 1, and then we'll look at one of the IT companies. IT is one of the dreaded sector at this point of time. But there is one presenter who thinks IT is the talk of the town now. So let's look at the thesis for IT when we reassemble at 1 o'clock. So we'll take a break. I will close the session. You have to rejoin again the same link at 1.